Good afternoon. Welcome to our Mindsy webinar, Process Mining for Internal Audit. My name is Daniel Hughes with Mindsy. Mindsy is a leading process mining software company founded and headquartered in North America. I personally have spent the last several years helping companies use process mining to improve business processes from procure to pay, order to cash, electric vehicle charging, construction planning, aircraft flights, internal audit, and many others. Today, we're going to look specifically at internal audit. I'll go through stakeholder expectations around internal audit, how those have been changing over the last few years. I'll talk specifically about process mining and how that fits into internal audit. And then 5 lessons that process mining could be helpful for internal audit. Talk about what's changed over the last 6 months or a year that made process mining usable in internal audit, and then save some time at the end for questions and answers. If you have questions, please feel free to enter them in the Q&A section, and I'll go over them here at the end. So over the past 10 years of surveys around internal audit, the profession has reported flat or even shrinking investments in the function and the size of the program. In 2019, though, that trend appeared to be reversing. 42% of the respondents to the survey reported an increase in the size of their audit plan in terms of audit days, and showed that increase over the 12 months of 2019. Since 2020, there have been signs of continued increase, and over a quarter of respondents to the survey reported spending more on external support systems year over year. This increase is likely being driven by increased delivering more value-added work product beyond just traditional delivery of financial process and control audits. More focusing on net increases in major projects and change initiatives, review of culture and soft controls, IT assurance, risk framework assurance, compliance audit, and operational audit. Those shifting priorities mean that internal audit is now being considered a key pillar to support the executive decision-making within an organization. But that doesn't really change, the expectations. There's still continued pressure to do more with less. Despite the higher complexity and the speed of risk, the internal audit function is still exposed to increased pressure to deliver more in less time. That means the internal audit has to be more efficient than ever. There's also expectations to provide enhanced value. So the era of just assessing control effectiveness is fading and fading quickly. A shift towards value-adding advice and management support has taken its place. Expectations from the boards, from risk and audit committees, and from senior managers are being elevated more and more and more. That leads to an increased emphasis on enterprise risk management and governance. Internal audit's just one line of defense in the organization, but rather than being focused on executing their audit plan only, the internal audit function should typically play a leading role in achieving a good integration with other governance, risk, and compliance activities in the organization. And then internal audit's being asked or tasked to give additional perspective on operations that are not available through other mechanisms. So internal auditors are the eyes and ears of the executive board. They should bring an additional view to business operations and proactively identify emerging risks that could disrupt the execution of the business. To make that happen, although North America lags behind Europe and Asia, to make that happen anyway, internal audit departments are increasingly turning to data analytics to help them meet these higher expectations of the business. Traditionally, these data analytics tools are, traditional tools like Microsoft Excel, or audit specific tools like Audit Board. From there, more advanced tools have been used recently, like BI tools. I think Power BI or Tableau or Click. Data extraction tools or ETL tools like Informatica and Talent. All of these have been integrated into the internal audit function in one way or another. But there's also specific data and analytical tools used to analyze business processes with process mining algorithms. And that's what we'll talk about today. So let's start with what is process mining. Process mining is an analytical technique that leverages data that you already collect in your transactional systems, in your enterprise resource planning or ERP system, in your customer relationship management or CRM system, or any other IT system that tracks the execution of a process from end to end. Process mining takes the data in those systems, passes it through a series of algorithms, and automatically maps or reverse engineers those business processes. And it allows you to see an end-to-end view of your process, and not just the most common ways that process was executed, but every single way that a process happens inside of your organization, whether it conforms to what you want to happen or whether it has conformance issues, and shows you exactly how that process has performed. What are the average, mean, max, minimum cycle times? Where are the bottlenecks? Where are the loops? And where's the rework? Typically, the processes that have been used for process mining are things like procure to pay or order to cash, lead to order out of your CRM system, hire to retire, customer support, IT service management, and many, many others. The data that you need to reverse engineer your process is actually pretty simple. You only need really three pieces of data to reverse engineer your process map. One are, what are the activities that happens in the process? What are the steps? What are those names? What happens? Two, when did that activity happen? What timestamp shows us when a specific event occurred? And then three, a unique identifier or case ID that allows the process mining algorithm to track a case from the beginning to the end. With just those three pieces of data, the algorithms are smart enough to reverse engineer your entire process and build a complete map to show you what's going on. For internal audit, that's probably not quite enough. That might help with walkthroughs. We'll talk about that in a minute. But by adding what we call attributes to the data log, you can do comparisons or look for compliance issues or identify segregation of duties errors or other errors or issues of internal controls. So that's where it comes. That data. So that data can be accessed in a number of systems. The simplest and easiest way for internal auditors is to get a dump or an export of one of the systems that they want to analyze the process from, and simply upload it as a CSV into process mining tools. If you have an internal team that's really good at data identification and data extraction, that might be a simple and internal way for you to start using process mining. A lot of internal auditors and internal audit teams don't have that capability in-house. So many of the new process mining tools give you the ability to connect directly into those systems, whether that's SAP or Infor or Workday or Salesforce or Microsoft Dynamics. process mining tools and process mining vendors have connectors that connect directly to those backend systems, know what tables have the data that they need to extract, can automatically extract that data, and then transform it inside of their platform. So whether you have a team in place that understands data, that knows how to get to the data and can extract the data, or you simply have backend systems and no team to do that, process mining could potentially be a solution for internal audit if you choose the correct vendor to work with. So the 5 things that process mining can be used for in internal audit, starting with the simplest and moving to the most advanced. 1 is audit planning and design. 2 is ensuring you have an efficient walkthrough. 3 is increased insight into your business process. 4th, risk-based testing or eliminating sampling from your audit process. And then, almost the holy grail is continuous risk assessment. So continuously monitoring your internal process for internal controls issues or violations. So starting with audit planning and design, right? Audit plan is meant for you to understand the company's strategic priorities, the key business objectives, and those risks, and then identify and consider the expectation of key stakeholders before conducting your risk assessment. When you add process mining to the audit plan, it allows you to assess all of your processes to identify what are the most critical processes for that particular department, company, or business. Then you can use the data from process mining to analyze the risk and control effectiveness for all of those processes. Once you've done that, you can then rank your processes and rank your audits based on the effectiveness of the internal controls, and then prioritize which processes you should audit. So you'll have a data-driven approach to identifying what processes you should look at using the data locked in your system. So just by collecting the 3 pieces of information I talked about, the process mining tools will show you a map of your process, identify what are the start times, the end time that you're looking at, what's the time span, how many cases went through, what are the number of events that happened, how many activities, what's the cycle duration, what's the skew of the performance of that process. So you'll have a really good idea of where you should plan your audit and spend your time. From there, you're going to want to go and do a walkthrough. Process mining is really good. It's really one of the first things you should look at is how do you improve your walkthrough efficiency? And process mining automates the walkthrough by allowing you to come into those meetings and not do subject matter expert interviews, not ask the business to tell you about their process, to tell you what they think happens in their process, but to actually walk into that meeting with a map of the process, with every way that the process has been executed, including what conforms to what you want to happen and all the one-off and other ways that the process happened. So that allows you to have a improved discussion with the process owners. You can tell them, look, 80% of the time or even 50% of the time, your process is executed in the manner that you want it to be, but you have 10% of your cases that go through one-off processes. You have 1% of your cases that skip this critical internal control step. And then from there, you can automatically generate evidence or walk through evidence, right? You have a number of options that you can use to document your walkthroughs. You can record the meeting, you can generate meeting minutes, you can annotate supporting evidence like screenshots, or you can generate process flows or a process map. Process mining automatically generates the process flow and the process map that you can use to document your walkthrough. And then further efficiencies and cost savings can be gained in your walkthroughs as you use the same technique across other processes. So I've seen specialized process mining software that delivers a good return on investment, because once you've developed your walkthrough and your plan, you can take that quickly from procure to pay to order to cash to record your reports or whatever other processes you want to look at. So what that might look like is walk into your walkthrough with a map of every step in the process, the number of cases or that went through each one of those steps, all of the different variants or ways that the process was executed. You could automatically identify every case or every variant that has conformance issues or that violates your internal controls, and bring those immediately to the attention of the business so that you don't have to do those interviews just to ask them what's happening and get their opinion. You can walk in with data of what's really going on. And that provides a lot of increased insight into the process, right? The visualization of the process map and the associated process statistics allow auditors to answer a number of questions like, how many activities are in the company's business process? Are all of those activities relevant to the business, right? Which activities occur the most frequently in the business process? What's the core business process for this organization? How many employees are involved in the company's business process, right? What are their responsibilities? Are there can you identify segregation of duties errors? Do you have employees doing back-to-back steps that they shouldn't be? And then what's the starting and ending dates for the sample or this process that we're looking at? What's the duration? What's the mean? What's the min? What's the max? So by mining your process and using the data, you'll have a lot more insight into the way the process is executed than you would have just asking the process owners what's been going on. And that can be displayed in a dashboard. You might want to look at, break the process down into fast, medium, slow, and extremely slow execution, and only audit the ones that are extremely slow. So you have the ability to gather all of that type of insight and only look at the areas of most interest to you. Fourth is risk-based testing. So this allows you to, instead of focusing on only one or two areas of risk and then testing a sample of those transactions, you can now audit more areas of risk by sampling or by testing every single transaction that goes through that business process and identify the ones that have conformance issues that you would like to look into, right? So if you wanted to look at fraud or inefficiencies or regulatory noncompliance, you could identify the cases that have those conformance issues and simply audit those individual transactions. So it'll be a lot easier for you to zoom in on the high risk areas and the exceptions to the process, or even departments or divisions or individuals that have the most internal controls violations, and audit those specific areas instead of spending a lot of time auditing areas that don't have any of those conformance issues. So far with process mining, we've looked at an overview of the process. We've looked at a map from top to bottom. But the process mining tools can also dive in and look at individual transaction or case execution and show you really quickly where there are loops and rework, where the same individual does back-to-back steps. It can highlight where there are conformance issues in your process. So you can take a sample of all of your transactions, or analyze all of your transactions, identify the areas that have, or the cases that have specific conformance issues that you want to target, and then look case by case at each one of those transactions to identify exactly how they were executed. And then finally, once you started analyzing your process, you've defined what performance and conformance looks like, you can actually continuously audit or continuously monitor those process and get alerts on conformance issues or internal controls breaches. So you can get daily updates or daily syncs from the system, and then automatically have an alert go to you, go to the manager, go to the business process owner to say, hey, this transaction has breached one of our internal controls. We need to take action on that. So it allows you to not just audit a process annually, but continuously identify what's going on. So you can look at service level agreements, you can look at industry regulations, you can look at internal policies, you can look at basically any rule that you want to define for a case. You can identify, and the system will automatically group it into conforming or non-conforming, can tag it on the severity of the conformance issues, and can alert you on any ones that you want to look into. So process mining has been around for a while, at least a decade, and it's spread through lots of businesses around the world. But it hasn't really taken off to a huge extent in internal audit. So what changed? Why now? And a couple of things have happened over the last, call it a year or so, that allows it to be really more useful and have more uptake in internal audit. One is the process mining technology has really matured over the last year or so. Before, it took a team of experts to find the data, connect to the data, extract the data, and transform it. But now the algorithms are smart enough and the vendors have matured enough that most vendors know, or at least some vendors know, what data you need to get from your systems, have automatic transformation and automatic creation of the analysis that you'll want to see for your internal audit. That's really simplified the technology, so that it doesn't take somebody that codes to build the analysis. It doesn't take coders to get to the data. This can all be done automatically by your provider, or even in some internal audit departments. And then the cost of process mining has come down quite drastically over the last year or so. A year ago, 18 months ago, this was really limited to the Fortune 100. It's really expensive to purchase the technology and implement, or you had to go build it yourself. But now the democratization of process mining and citizen process miners has made this more affordable for internal audit departments. And then some providers even have process mining as a service. You can say, I want to do internal audit. My system is SAP. Here's my list of internal controls. And the provider can set all of that up for you and have process mining pre-built for internal audit, where all you and your business need to do is go in and analyze the data and take action. So I hope that was helpful. Let me look through the questions here. If there are any additional questions, go ahead and enter those in the Q&A, and I'll see if I can answer them. It looks like the questions that are in here right now are really specific, probably not relevant to the group, so I'll take those offline and answer those individually. Hope you enjoyed process mining for internal audit. Hope you were able to take a little bit away from it. We do these webinars weekly. The next one is on unlocking Salesforce for process insights and using process predictive algorithms to determine what deals are likely to close when forecasted by the reps. And then next, in October 5th, is an interesting comparison of process mining with task mining, and what are the use cases for each one of those and where they can be used together. So I hope if those are interesting that you'll be able to join us for one of those. If you have any additional questions or would like to see this in action in your environment, please feel free to reach out. You can call us, you can email us, you can chat on our website, or feel free to connect with me on LinkedIn. I appreciate you joining. If you have any questions, feel free to reach out.